short interest in GameStop.
This GameStop situation is the craziest I think I've ever seen.
So there's been a lot of talk this week about the GameStop drama and the hedge funds and Robinhood.
In early 2021, a financial storm was quietly brewing online, one that would soon shake Wall Street and captivate the world. GameStop, a struggling video game retailer with stores closing across the United States, seemed destined for obscurity. Yet, it became the unexpected centerpiece of a battle between ordinary people and billion-dollar hedge funds. The unlikely heroes, members of a Reddit forum called Wall Street Bets. Hedge funds had been heavily shorting GameStop, betting billions that the company's stock would collapse completely. To these financial giants, GameStop was a failing business, and they expected to profit as it floundered. But the Reddit users saw an opportunity, a chance to challenge the system that had long seemed rigged in favor of the elite. Slowly, a plan emerged. Users encouraged each other to buy shares, post memes, and track hedge fund positions. The movement was fueled not just by financial ambition, but by the thrill of rebellion. Online chatter intensified. Screenshots of holdings, buying strategies, and even jokes about "to the moon" rallied thousands of users to join. Social media exploded as ordinary Americans realized they could collectively impact the stock market, something previously thought impossible. Hedge funds, confident in their positions, began to notice unusual buying patterns, and whispers of panic started circulating. The mainstream media began covering the story, amplifying the frenzy. Suddenly, this small stock was no longer just about a struggling retailer. It symbolized a revolt against the entrenched power of Wall Street. The narrative of David versus Goliath resonated deeply. Everyday people challenging billionaires with nothing but smartphones and internet connections. As the stock price began its initial climb, the energy online became electric. Memes, viral posts, and community debates dominated Reddit and Twitter. Discussions ranged from strategy to ethics, from personal risk to shared triumph. Some investors were skeptical, others eager to take a stand. But one fact was undeniable. A revolution had begun. Hedge funds were now facing pressure they hadn't anticipated, and the Reddit army was just getting started. This was no longer a simple investment. It was a movement, a clash of cultures, and the beginning of one of the most extraordinary stories in financial history. Main Street had a voice, and for the first time, it seemed powerful enough to challenge the giants. By mid-January 2021, GameStop had become a global sensation. Shares that had languished under $20 at the start of the month skyrocketed past $300 in a matter of days. The surge wasn't caused by hedge funds, financial analysts, or CEOs. It was fueled entirely by millions of ordinary retail investors coordinating online. What had started as a small rebellion on Reddit became one of the most dramatic short squeezes in financial history. Hedge funds that had bet billions against GameStop were suddenly facing catastrophic losses. Melvin Capital alone lost over $6 billion in weeks, and other firms were scrambling to cover their positions. The financial elite had underestimated the power of collective action. As retail investors bought shares and options in massive numbers, the short squeeze intensified, forcing hedge funds to purchase shares at higher and higher prices, further accelerating the rally. Social media erupted with excitement. Memes flooded Twitter, TikTok, and Reddit. Gamers, investors, and ordinary Americans celebrated their collective victory. Posts showcasing sudden gains, screenshots of portfolios, and humorous commentary went viral. Wall Street, accustomed to operating with minimal public scrutiny, was suddenly under siege by an army of meme-literate retail traders. But chaos was inevitable. Many newcomers jumped in late, buying at the peak, and faced devastating losses when the stock eventually corrected. Meanwhile, Robinhood, the trading app central to this revolution, restricted trading on GameStop and other meme stocks, citing market volatility. The move sparked outrage, with users accusing the platform of siding with hedge funds, betraying the very people who had fueled its growth. Hashtags demanding transparency and fairness went viral, and congressional attention followed. Major news outlets struggled to keep up. Interviews, panel discussions, and live updates dominated television and online coverage. Analysts debated whether retail investors had genuinely won or whether they had been used as pawns in a much larger game. Hedge funds were bruised but still operational, regulators were investigating, and the broader market had been rattled. The frenzy also had cultural significance. Ordinary Americans saw the power of coordination, community, and collective action. The story of GameStop became a symbol of resistance, a David versus Goliath narrative where everyday people challenged billionaires and shook the financial system. Imagine watching the financial system you've trusted for decades suddenly shaken to its core. That's exactly what millions of Americans experienced in the aftermath of the GameStop frenzy. Just weeks after the Reddit-driven short squeeze, Congress was calling hearings, hedge fund CEOs were testifying, and Robinhood executives were grilled for restricting trades. The public wanted answers. Had retail investors truly challenged Wall Street, or were they just pawns in a spectacle fueled by hype and social media frenzy? Millions of ordinary investors had experienced a roller coaster of emotions, sudden gains, exhilarating victories, and crushing losses. Hedge funds, despite losing billions, managed to stabilize, while Robinhood faced lawsuits, regulatory scrutiny, and a reputation crisis. Analysts debated endlessly whether Main Street had truly won or if the event was merely a temporary disruption. Yet one thing was undeniable. The rules of investing had been rewritten, and the power dynamics in financial markets had been exposed to the public eye like never before. The cultural and social impact was enormous. Millions of Americans now recognize that coordinated action, fueled by information and technology, could genuinely challenge entrenched financial power. The story also highlighted the risks. Latecomers to the GameStop rally faced massive losses, and the chaos prompted regulators to rethink market fairness and protections for retail investors. The financial system itself had been tested, and the lessons were clear. Access, transparency, and awareness matter more than ever. Beyond the money, the GameStop saga became a symbol of trust, control, and empowerment. It showed how ordinary people, when united, could influence institutions previously considered untouchable. The event sparked debates about ethics, market manipulation, and the growing role of social media in finance. It even inspired movements in other sectors, proving that collective power was no longer theoretical, but tangible. As the dust settled, investors and analysts alike reflected on what had happened. Could this happen again? Would retail investors continue to wield this newfound influence, or would Wall Street adapt to prevent another David versus Goliath scenario? The answers remain uncertain, but one lesson is clear. The market has changed, and its participants must evolve. For Americans, GameStop became more than a stock. It was a story of rebellion, a cautionary tale, and a movement that questioned the very foundation of Wall Street. Ordinary citizens had challenged billionaires, forced media scrutiny, and altered perceptions of power. The question remains: who truly holds control in the modern financial system? If you enjoyed this story, make sure to like, comment, and share this video, and subscribe for more insane financial scandals that change the world.